There you are, dear friends. So, hello, dear friends. My name is Clive Thompson. It's Monday evening. It's cold, wet, and dreary. Tomorrow's going to be the same, no rise and shine. So, if you're feeling like taking a sickie tomorrow, let me know in the comments and I'll give you a like. I'm here to tell you about the stock markets, the world economy, today and for the last few days. But if you stay tuned, I will tell you the story about how I accidentally tried to date my boss's girlfriend and miraculously, well, I'll tell you whether I survived or not. You'll find out at the end, but murder was potentially on the cards. Now, the US has ended its shutdown. The official end was on November the 12th, Wednesday, last week, and furloughed employees began to return to work on Thursday. Under the Government Employee Fair Treatment Act, federal workers will receive retroactive pay for the time they were furloughed. That act will also require them probably to repay the unemployment pay if they received any during the shutdown. So rather than sitting around waiting for a letter from the government, you might want to voluntarily repay your unemployment pay for that period. Good news is I also read, though I don't have any authority on this, that the government is going to pay you the unemployment, not the unemployment, the government's going to pay you the overtime, which you would have done if you had been at work. So that's good news for everybody. Nobody should be out of pocket for that. Be a nice little boost to the economy, probably about $15 billion going into the economy when you get your pay. And I hope those of you who did stay at home managed to save some money on transport costs or childcare or spending expensive lunches and so forth. But also I'd like to just point out that more than half of government workers continued to go to work despite the fact they weren't being paid at the time. So well done to them. So let's just take a look now at the Department of the Treasury to see how the government debt's doing. It's been a month or two since we looked at that. Let's bring that up. So last time we looked at it, I think it was July the 1st or thereabouts. That'd be about there. Let's go to there. 1st of July or July the 1st, 2025. A couple of months ago, the debt was at $36.21 trillion. And let's see where it is now. We're at 38 point, well, actually that figure, to be precise, is 38 trillion 150 billion 716 million 416,656 dollars and 92 cents precisely. And that was 4 days ago. I guess it'll be a little bit higher when they pay the millions of government workers who are due their back pay when they were furloughed. So let's work out how much the government debt is increasing. So July 2nd or July the 1st, it was 36.21 trillion. November the 13th, it was 38.15 trillion. That's a difference of nearly 2 trillion, 1.94 trillion to be precise, in 134 days. So that's equivalent to an annualized increase of about 5.25 trillion a year on a debt of 36.15 trillion. So that would be an annualized inflation rate of 13.85%, not retail prices. That's an inflation rate of the government debt. It'll be a little bit higher when they pay the government workers this week. What's going on in the stock markets? Let's bring up the latest indices and see where we are. Well, it's been like the grand old Duke of York. In 5 days, stocks climbed to the top of the hill and then they marched themselves down again. And when they were up, they were up. And when they were down, they were down. And when they were halfway up, they were neither up nor down. And basically, that's where we are now. The sentiment on stock markets has turned very, very negative But at the end of the day, we're not down a lot. I think the biggest fall has been on the NASDAQ, and that's what people are holding out as the example of falling stocks. So we'll just flip through here. The S&P is about the same as it was a month ago. The NASDAQ index is, it's a tiny bit below where it was a month ago. But if we take it from the peak at 26,183, that's the all-time peak, down to where it is now, 24,800. That's about 4.5%, 5%. That's, my friends, that's not a crash, but is a decline. It's a serious decline over the period of a month. But if you'd bought the index, let's say 3 months ago, you're still, even if you bought the collapsing NASDAQ, you're still nicely in profit. Having said that, the technicals are pretty negative. Let's have a look at the technicals on NASDAQ. There you are. Flashing neutral to sell, so not particularly exciting there if those technicals are right. That's in strong comparison with gold. Let's just look at the technicals on the Dow Jones as well. Dow Jones is more of a buy according to this. Can't get on the S&P 500. We'll look at what's going on in Germany. Let's have a look at the German index. Technicals on Germany are negative, so we can see in Europe stock markets are looking a bit negative around the world here. Let's get that back. So that's the DAX and the FTSE 100. Go to the FTSE 100. There's the FTSE 100 coming off its high, but still well above where it was a month ago. The best performing markets in the world are Hong Kong. That's the Hang Seng Index. Let's look at it year to date. It's up 36% year to date. The Nikkei 225, that's up 28%, and I won't show you, the Shanghai stocks are up 23%. So basically Asia is doing very well. When it comes to individual stocks last week, we saw that Disney took a big hit in the middle of the week. Mixed earnings report was the reason. So Disney is down 10%, as you can see on the chart. It doesn't quite surprise me. Who watches Donald Duck and Mickey Mouse these days? I mean, kids still love Disney movies. My little boy, he's 8 years old. He's watched all the classics, The Lion King, Toy Story, Frozen, and so forth. And even the old classics, Dumbo, Snow White, Peter Pan, and so forth. But does he still watch Disney by choice? I mean, we've got Disney on our TV, and the price is $0. Got to like that price. It's a special offer until Christmas from Swisscom. But how many times has my 8-year-old boy watched Disney in the last 6 months? Answer, none. Not once. That's his choice, not mine. And the reality and the reason for that is there are countless media outlets vying for his eyeballs, and the competition is very fierce. Disney, Netflix, their cables may have now reached the 4 corners of the earth, but they're starting to run out of eyeballs. I mean, of course, Disney does lots of other things like sports and theme parks and so forth, so I'm not suggesting they're dead, but there is a thing going on with people cutting the cords because they've got so many outlets which are free. They're saying, why would I pay for this or that, or why am I paying for 2 or 3 things? I cut my Netflix subscription around the time that Trump imposed the 39% tariffs. I might now they've been negotiated away on Switzerland. I think I might resubscribe to Netflix. Swisscom are offering me a half-price bundle to entice me back onto Netflix. But one of the beneficiaries of eyeballs is, in fact, Alphabet. Now, Alphabet is attracting more and more viewers to its YouTube channel, and Alphabet's YouTube channel is owned by basically Alphabet owns Google and YouTube. So Warren Buffett has just seen fit to invest a ton of money into Alphabet. There you are. He's invested $4.9 billion, nearly $5 billion into Alphabet, otherwise known as Google or YouTube, depending on which way you want to call it. And you can see the share price jumping today. That news came out on Friday, between Friday and today. So this morning the stock is up 4.35%, up at 5% at one point. Other stocks over the last week have done pretty much the same as I described with NASDAQ, climb the hill up to the middle of the week, then coming back down. Small comment on Berkshire Hathaway buying Google. Let's just see how good their timing was. Remember, they started raising cash in 2022. So by the end of 2022, Berkshire Hathaway had tens of billions of dollars of cash on their balance sheet. It might have been more than that, but they had a lot of cash. They'd been selling things. Did they buy Google back then? No, they didn't. So had they done that, let's just see. In 2022, the price would have been by October 2022. The price was $89. It's now what? $289. So they've been sitting on that cash while the price of Google's been going up. Oh, by the way, you're probably wondering what that green line is. That green line is the point where I bought. I bought my Google at, it seems like, $88.81. So who's better? Let's move on. Government bonds. Let's go to that. Nothing special to say. The yield on US Treasuries, the 10-year, is slightly higher at 4.12, was 4.14 a bit earlier. It's slightly higher on the 10-year bond at 4.14 than you can get on the Fed funds rate of 4%, and that Fed funds rate might go down to 3.75% in December. And by the way, it's a long way from being a certain bet. Moving on to gold. Gold continues to be relatively strong. We'll just have a look at the technicals on gold and see what they say. So there we go. Strong buy, or neutral, depending which way you look, but certainly varying between neutral and strong buy. So I guess that's on average a buy. So gold is looking quite strong. It's at 4,068. It's down $11 today. Let's have a look at the technicals on silver. Silver's even a stronger buy than gold, according to this, but it has come off from its peak a few days ago, $54. So silver is now $50.75, apparently up very slightly today. But if you go back a few days ago, I'll just put the 5-day chart here, you can see it was trading at $54 on Thursday and then came off quite sharply to $50. But still well above the $50 level, or not well above the $50 level, which was a level which many people said ought to be achieved this year, and well, we've got there. Platinum, let's see, it looks a bit negative to me. It's not really looking that strong. Let's look at the 1-year chart, or 6 year-to-date chart. Yeah, it's looking like it's coming off the highs a little bit more strongly. And palladium as well. Let's look at palladium. There we are. Same thing. So probably platinum, the technical indicators are not that good. Let's go to the technicals there. Yeah, sell. And palladium, that's platinum. Let's go to the palladium. And that's palladium. That's sell, or sell neutral. Yeah, so not particularly strong there. Oil price. Downtrend continues. West Texas Intermediate is at $60.07. Copper, it's not doing that well. It's a little bit higher at $5.01 from earlier in the month. But, you can see it's pretty much flatlining this year. If we look at the whole of the year, not exciting really. We'll just check the technicals on that very quickly. Sell, neutral is what the technicals say. That's not me saying it. It's not my investment advice. Nothing I say, by the way, here in this video is investment advice. Do your own research. And of course, I'm sure you're all wondering what Bitcoin is doing. Well, the answer is it's plunging. Look at that. Down, it wasn't only a day or two ago, it was above 100,000. Let's CBOE Futures Exchange to offer futures trading in Bitcoin and Ether. I thought they already did that. Puzzled by that word. Let's look at it year to date. So, yeah, Bitcoin, as you can see that little orange line I drew last time we were on here, showing it falling. Well, it's now plunged through the 100,000 mark, down at $93,640. So it's come off very strongly, and Ethereum is standing at $3,100 exactly. Now, one thing about Bitcoin, just to say, to be aware of, on November the 24th, in 7 days' time, the Singapore Exchange will launch Bitcoin and Ethereum perpetual futures. Now, don't ask me what a perpetual future is. I guess it's something which never gets delivered or never expires. But we'll see if that does anything. It depends how much Chinese interest there is, I suppose, in the Singapore Bitcoin futures. I mean, are Chinese investors allowed to buy Bitcoin at all? I don't think so. So what can we say about Bitcoin? I guess the FOMO, fear of missing out, has now turned into not FOMO, but oh no, it's going down. But it's an opportunity now to give you one of my lessons that I've learned over the years. For every index, for every stock, for Bitcoin, for gold, or for any other investment asset, during the course of a year, there will be good news, there'll be bad news, then there'll be good news again, then there'll be bad news again. It's good and bad multiple times a year. If you try to trade after watching the news, you'll constantly sell when you feel negative after the bad news, and you'll constantly buy when stocks are higher after the good news. So you'll be in and out like a yo-yo, buying high, selling low. So my advice is, if it's good enough to buy on a particular day, buy it and stop watching the news. Otherwise, you'll react to the news. And just hang on to it for a year or two or multiple years. Doesn't matter what asset. I'm not talking about Bitcoin or anything special. I'm talking about every asset. When you buy it, don't watch the news on it. You won't get any advantage by seeing the bad news and saying, I better sell it. And the next week there's good news and say, I shouldn't have sold it. That's the way the market goes. News on Federal Reserve, nothing special to say other than there's a hope that there'll be a cut in December. We've had 2 cuts this year, one in September and one in October. They were both 0.25% cuts. And the probability of a cut in December is slightly more than 50% at the moment, so far from guaranteed. China. The Chinese economy is losing a little bit of its momentum. The industrial output in October was up 4.9%. Still very good, but as far as China is concerned, it's the weakest since 2024, but obviously a stronger number than the rest of the world. Retail sales in China were up 2.9%, still a little bit stronger than many countries, but as far as China is concerned, it's the weakest in the last 12 months. China has banned the use of foreign artificial intelligence chips for state-funded data centers. So that's directly targeting, I guess, NVIDIA chips to basically force Chinese manufacturers or encourage Chinese manufacturers to have a chance at selling their chips to Chinese government-owned or controlled state-owned funded enterprises. Now, you might recall that NVIDIA had agreed to pay 15% of its total revenue from selling chips to China. Well, now that China won't be buying those chips, the US won't get a cent. At least not from NVIDIA. France. France remains in a rolling political and fiscal crisis. Parliament has suspended President Macron's pension reform bill, and the retirement age has now been fixed at 62 years and 9 months until 2028. France cannot afford such a low retirement age. But they pushed out that reform, which was raising the retirement age to 64. They pushed it out now to 2028. So France is facing the largest budget deficit in the Eurozone. The 2025 deficit is way beyond what's allowed. And it's currently facing a crisis for its 2026 budget, which has not yet been agreed. So unless the government can cobble together enough votes, which does seem unlikely at this point in time, it will probably face the spectre of early elections. So really, France is drifting into a permanent crisis of some sort, which is happening just at the time the Eurozone really needs more coherence. Now, I did promise you a story, and this is a story about how I nearly got myself murdered when I tried to pick up the girlfriend of my boss without knowing it. But let's go back to the beginning. The year was 1975, and I was a young lad of 18 years old working in my first job at Lloyd's Bank, and I was basically doing the filing. That's what you do when you start. And back in those days, I didn't earn a lot of money. The salary was £750 a year. I repeat, £750 a year, not a month. But on top of that, we'd get £150 a year of what they called London waiting. London waiting was effectively compensation for the cost of getting into central London. If you lived out in Epping, where I lived, a long, long way from London, a tube ticket then was about 50p a day. So I don't know, that's 25 pence each way or 50 pence each way, but anyway, something like that. So the London waiting of £150 was to compensate us to some extent for the cost of travel. And we also got 15 pence a day in luncheon vouchers, which was about enough to buy a sandwich and a cup of tea. So we didn't really have any money to spare. I mean, I definitely didn't have much to spare. I mean, I was saving, but I didn't regard it as money I wanted to spend. I mean, the whole idea of getting a job is to save money, not to spend it. So I didn't really have a lot. A large part of what I earned was going on travel. Now, back then, when I was 18, my boss was a strapping Scotsman, a big chap. Scots people, you probably know, they're red-headed, they're big, and his name was Donald Maguire. Now, just checking something here. Donald Maguire was probably about 2 or 3 years older than I was. Maybe he was 21 or 22 years old. Not a senior boss, a very junior boss, but one level above me. So he was kind of like my immediate supervisor, making sure I was doing the filing right. So one day, Donald said to me, "Clive, why don't you come down to the pub with me for a drink after work?" Now, back then, a pint of beer probably cost something like 50 pence. And I wasn't sure that I wanted to spend that kind of money. So I kind of said to him, well, but I haven't got any money. I can't afford it. At least that was my protest. "Don't worry," he replied. And I wish I could do a Scottish accent here, but he said with a Scottish accent, this big guy, "Don't worry," he said, "I'm buying." So free beer was actually something I could afford. At least I liked that price. So we went to the pub after work, and I'm not going to tell you it's my first time in the pub, but it could have been the second time ever in a pub. The pubs were kind of expensive for a young chap with no money. We had been taken to the pub when I was a schoolboy at the age of 17. There was a school teacher who took us to a pub near to the school. There was 2 or 3 of us boys were taken by him, and we all got quite plastered on beer, and were having a great time until the headmaster walked in. And I can tell you the headmaster was not best pleased because we were all underage. Anyway, he sent us all home, and I think the teacher got quite a talking to. The teacher was actually the head of drama or acting in the school theatre. His name, we were supposed to call him Mr. Brandon, but behind his back, all the kids seemed to call him Auntie Brandon. no idea why he was called Auntie Brandon, because he was a bloke. But anyway, that's what happened. Anyway, so back to the story. I'm in the pub with this huge Scotsman. He's big, he's taller than me, he's got broad shoulders, he's got red hair, and we're having a beer and having a nice talk, and talking about work and things like that. And I knew that Donald had a girlfriend, and I didn't have a girlfriend. I mean, I'd been to an all-boys school. I didn't really know what girls were at that age. So we're talking, I mean, we did know what girls are. We had this magazine called Health and Efficiency, or H&E as it was nicknamed. That was one of those things where they showed people doing exercises, and you had to use your imagination a little bit. I won't go into more details than that. Anyway, Donald, I knew, had a girlfriend, and so I said to him, "Hey, Donald, you've got a girlfriend, don't you?" And he replied in the affirmative. He said yes. So then I asked him, "How do you get a girlfriend?" "Easy," he replied with his Scottish accent. He said, "You see those two girls over there?" Pointing to a couple of girls near the bar. I looked over. He said, "Tell me, Clive, what are they drinking?" "I don't know," I replied. "Exactly," he replied. "All you have to do is go and find out what they're drinking, and you're on your way." "How?" I asked. So he replied to me. He said, "You go up to them and ask them, 'What are you drinking?' If they tell you, you're in. If not, they're not interested and you can walk away." I was kind of puzzled as to how that trick might work, but he soon brought me back to my senses when he said, "But watch out, Clive. First, you need to check they're not with some guy. If they are, he'll probably beat you up for trying to pick up his girlfriend." Then Donald proceeded to tell me how some guy had had the gall to ask his girlfriend what she was drinking. "I gave him a Glasgow kiss," said Donald. I said, "What, you kissed him?" "No, you wee man from London. A Scottish kiss is a headbutt." And he demonstrated how he shoved his head forward and nearly hit his beer glass with it. And I said, "Oh." And so he described in some detail how he had literally broken the guy's nose with a headbutt and literally put him in hospital. And then he said to me, "If anyone chats up my girlfriend, I'll kill them. Fair warning." So a few months later, Lloyds Bank decided to send me on a training course, and that training course was taking place somewhere near Manchester. So I was on the train from London to Manchester, and I had the good luck to find myself sitting, perhaps by design maybe, opposite a pretty young lady. And after a while, quite a while actually, of thinking about it, we got talking. Now, as we were pulling towards Manchester, and we weren't far away, she asked me a question which we hadn't discussed before. She said, "Where are you working?" And I said, "I'm working for Lloyds Bank in Cheapside." And she replied, "Oh, what a coincidence. My boyfriend works there. Maybe you know him." "His name's Donald Maguire. He's from Scotland. Do you know him?" Well, I definitely knew him. He was my boss, and he murders people who talk to his girlfriend. So I stuttered. I'm not sure. It's a big bank." And then she said, "What's your name? I'll ask him. He knows everyone there." And so I replied, "It's Claude Thomas. I'm sure he won't know me. We're on different floors." Ladies and gentlemen, thank you very much for listening. My real name is not Claude, it's Clive Thompson. If you like that story, and if you'd like to get the financial news daily or from time to time, please hit the like and subscribe button, and don't forget that little bell. Thanks very much, everybody, and see you soon. Bye-bye for now.